Friday, July 28th, 2017, Monaco 64, home of alternative economics and contrarian views. So this is a special data update or economic statistics update. It's 1:30 p.m. London time or 8:30 a.m. Eastern Standard Time, and we've just had some key economic data out of the U.S. GDP, preliminary GDP for the second quarter came out in line at 2.6%. Previous number, though, was revised down to 1.2% from 1.4. So that's a week in of itself. The other important number that was coming out is the employment cost index, which is the cost of employing people, basically. And it's one of the numbers or data points that the Fed pays close attention to in order to ascertain whether there are inflationary pressures out there. That number was expected 0.6 for the second quarter, 0.6%. Quarter on quarter. It came out 0.5, so weaker than expected, and the previous number was 0.8. And also for the GDP price index, that came out at 1%. It was expected 1.3. So that means that the inflationary component that's taken out of nominal GDP was lower. So basically, instead of 1.3% price index, we came out 1%. So that these numbers should be quite positive for precious metals and bearish for the dollar. And that's just what's happened. Just before the number, gold was trading 1261. We're now at 1266. The high's been 1267.47. Silver just traded up to 1677. We're now at 1674. In terms of the stock market, we haven't seen much of a move here. We're down 7 on the S&P prior to the number, and we're down 6 points now. The Dow is down 27 points. Not much change. The NASDAQ 100 future was down 0.9%. It's now down 0.8%. So pretty muted reaction. But I think this just goes to show that the Fed will probably be more accommodative than they had previously indicated to the markets with these numbers. GDP at 2.6 is in line, but there were some economists that were expecting a 3 handle. So, and also the employment cost is fairly weak, and we saw a drop from 0.8 to 0.5. In terms of the currencies, the euro's making new daily highs here. We just traded up to 117.54. The high prior to the number was 117.32. The euro is up 0.2% or 72 pips. The dollar is just made a new low against the yen for the day. It was above 111 before the number, and we're now at 110.87. British pound has risen back above 131. And the dollar index, unfortunately, I have a delayed price, but I expect us to go and test the 93.15 we saw earlier this week or yesterday. Right now, at 8:22 Eastern Standard Time, the dollar index was 93.60. I expect it to go further down, even if we had strong GDP number like 3%. I think the trend is still down for the US dollar, up for precious metals and commodities. Stock market, I think, difficult to say, it's still fairly strong. Don't see anything, any kind of crash coming or anything like that. The Dow and the S&P still remain very elevated. Percentage-wise, not so much. It's just that the higher we get, 100 points seems like a big gain, but if we're trading down at 10,000 Dow, it would be 50 points. So we have to remember that, the logarithmic moves. What else? No, that's about it. there is actually one thing I'd like to talk about that's probably also helping the euro. We had German CPI out today, the biggest economy in Europe, and German CPI was expected to come out at 0.2 on the month for July and 1.5 year on year. And it came out 0.4 and 1.7. So a lot higher than expected, German CPI. And I think that's also helping the euro. The Germans hate high inflation. For them, like 3% is like almost like disastrous. So the fact that the German CPI was fairly strong today and higher than expected, that's also helping the euro. So yeah, where are we now? Spot gold 1265, silver 1670. We've come off a little bit, but still fairly strong. Euro 117.40, dollar yen 110.93. One thing I would say though, looking at the euro chart, we are at 2.5-year highs, and the key resistance longer term was 116. So it looks like unless there's a complete turnaround here later on this morning and this afternoon in the US, the euro is going to close massively bullish for the week, way above 116. We're still off the highs from yesterday, which I think was 117.70. But I would say that 120 level is a medium-term target and is going to act like a magnet. So I continue to see the dollar weakening. Yeah, in terms of politics, I see that there was a vote in the Senate yesterday, and 3 Republican senators voted against the repeal, basically almost the repeal of Obamacare, I guess. And one of them was warmongering John McCain, which is not surprising. Yeah, so I will maybe make another video later on today, depending on what we do here in the markets. But to sum up, US GDP was stronger than expected was stronger than in the first quarter, came out at 2.6% year on year. That is the preliminary number. There's another 2 numbers coming out over the next few months though. There's the preliminary, advanced, and final numbers coming out, so that could change up or down. But importantly as well, first quarter GDP was revised down from 1.4 to 1.2%. And employment cost index, which is basically measuring the cost of labor, that dropped from 0.8 to 0.5 from the first quarter, was expected 0.6. Probably market is going to take that as, giving the Fed more leeway not to raise rates, and probably even delay a little further their supposedly, unwinding of their balance sheet. It's just talk now. So if you enjoyed this video, please like, share, subscribe to my channel if you haven't yet. Follow me on steemit.com as well, STEEMIT.com. And if you like to donate to the channel, if you think we add value, there's some links below in the description. And I'll talk to you later. Bye.